Hi, this is Bhaskar Jayavelu. Welcome back to Madras Tech 360. Today, let us see the end of the day chart analysis for Nifty and Bank Nifty on 22nd October 2021. First, let us look at the Nifty chart and mark the important supports and resistance. This is PDH and this is PDL. There is no CPR, Virgin CPR nearby, so it is not necessary to mark CPR right now. And this is a supply zone where market crash from this point, and it comes along with the PDH, so even that is not required to mark. Let me play the candlesticks now. Market opened a slight gap up with a green bullish candle, and this bullish candle is a pin bar where you can see a big wicks on the downside. You can go for the entry at this green candle, but the only problem will be your stop loss. Look at the stop loss here. It will be very big if you place a stop loss at the bottom of this candle. In trading, we should be very much careful about this stop loss. First thing is to save our capital. So keeping the proper stop loss will always save our capital. If our stop loss is too big, we cannot save our capital, and if the stop loss hits, gone. If you go for the entry at the close of this green candle, if suppose your stop loss point will be around some 20 points, if your strike price is at the money, look, your target should be 2 hour, but market didn't go for 2 hour. Let me show you. This will be the entry and this will be your stop loss, and look, your target is here, but market didn't go that far, but it came back to the CPR again and took away the stop loss. So it is always better to wait for right opportunity. So there is no opportunity at the first candle. The market came down to the CPR, and this candle broke the CPR. A novice trader, what he will do is he will go for a short entry at this green candle, but what happened, just see. If he takes the entry at the close of this green candle, he might have kept the stop loss at the center of the CPR or above the CPR, but market went up, took away the stop loss. But what I will do is I will not go for the short entry at this point, as I repeatedly telling you that breakout without any consolidation is not valid. Here there is no consolidation before the breakout. There should be some consolidation inside the CPR like this, and if there is a breakout after that consolidation, we can very well go for that trade as per my strategy. After that, market came down, touched the PDL and reversed from there. I always tell you that PDH, PDL, supply zone, demand zone will always act as a strong supports and resistance. Look, the same way market came to PDL and got reversed, and you can go for a entry at this close of this green candle and keep your stop loss below this PDL and book your profit at 2 hour. But market went up and closed somewhere near 1.5 hour. So in Nifty we had only one trade which gave us a profit of 1.5 hour. Even though there is a huge movement in Nifty, we couldn't able to take any trade because there is no pattern according to our strategy. So there was only one trade here. Now let's look at the Bank Nifty chart and mark the important supports and resistance there. We'll mark the PDH and PDL here. This is PDH and this is PDL. There is no virgin CPR nearby, so there is no requirement to mark that. And look at this. This is a demand zone where active buyers were present, strong buyers, and took away the market nearly some 700 points. These are the only supports and resistance. Let me play the candlesticks now. Okay, market opened almost flat with a green candle. Look at this green candle. This green candle broke the PDH and closed above the PDH. One can go for an entry at the close of this green candle, but look at the target is very close, and we don't have the proper risk reward ratio at here. If we place a stop loss below this candle, if suppose this pivot, that is this resistance is somewhere here, you can go for a long entry by keeping the stop loss below the candle and book your profit target here. But look at this resistance, it's very close, so we cannot take risk because it is not coming under our risk reward ratio. So there is no trade on the first candle. And here, look here, the market went touched the resistance and came back to the low of the first candle, that is day's low, and bounced from there. Whenever you have a white CPR and market opened with a green candle and market comes to the day's low, you can take an entry at the close of this green candle, placing the stop loss below the PDH and book the profit as at day's high. But I will not prefer to go for this trade because the movement is very small. So looking for the next opportunity, I could see a best opportunity at this red candle, because market went up, came down almost near to the PDH, and again went up to the day's high. So one can go for a short entry at this red candle. You can go for the entry here by placing a stop loss above the candle. I'm sorry. Stop loss above the candle and book your profit somewhere here 2R. This is a good trade which gave us a profit of 2R, and market again came down to the day's low and bounced from there. So we can also go for an entry at this green candle. This is called a triple bottom. Market went up, touched the second time, again went up, touched the third time, so it touched 3 times at the same place. So this is called triple bottom. We can go for this entry here by placing the stop loss below the candle. Entry here, stop loss below the candle, and target here. So even this trade gave us a good profit of 2R. So overall in Bank Nifty, we had 2 trades. Both the trades gave us a profit of 2R each, and overall there were 4R profit. So overall in Nifty, we had a profit of 1.5R, and Bank Nifty we made a profit of 4R. and overall we made a profit of 5.5 R, which is 5.5% of your ROI, return on investment. That's all about today's end of the day chart analysis on Nifty and Bank Nifty. Meet you all tomorrow, guys. Bye.